has been skyrocketing, ironically enough, on the day of the State of the Union. Can't make that stuff up. Proof that we're living in a simulation. On the day of the State of the Union, oil absolutely skyrockets, breaks through 100 a barrel. As I'm making this video, I'm looking over here at the chart on the left. I'm going to show you the chart in a second and some of the research I've been doing. We're at $108.55 a barrel for oil. And I've been talking about this in the past, about stagflation and what caused stagflation in the past. History, sometimes what's the saying? History doesn't repeat itself, but it often rhymes. Something along those lines, right? Well, this time it's repeating itself and rhyming because what caused stagflation of the late 70s, early 80s was literally an oil crisis, was a shortage of oil. There's pictures you can look up where there's cars lined up around the block trying to get oil, and there was an oil shortage, and then prices were through the roof. And that oil shortage triggered a supply shock, and that term, supply shock, is what caused stagflation. That mixed with low economic output. So you got, as much as we're told that the economy's fine and things are flourishing and all that, I don't know if I buy that. I don't know if I buy if unemployment is actually where they say it is. I don't know if I'm on board with that. I happen to think that we have low economic output. We have high inflation that can't be stopped. And something I've been talking about in the past, and I'm going to go over the charts over here to show you all what I've been looking at with oil and all of that in a sec, but something in the past that I've been looking into is the situation where stagflation can get out of control. And when stagflation does get out of control, I call it stagflation. I think we're in textbook. Like if you were to bulletin point exactly what stagflation is, you got high inflation, low economic output. You got a random spike and that causes a supply shock. Like these are literally the bulletin points of what caused stagflation. And that's why I've been saying on my channel, I've made videos about stagflation in the past. And now we're kind of seeing it come to fruition. But what's crazy this time around is people are still, the audacity that people are talking about, well, is the Fed actually going to raise rates? Are they going to use what's going on as an excuse not to raise rates? That's what we're hearing right now and from all the different YouTube outlets and people all over Twitter and Instagram and whatnot. Are they going to raise rates? What are they going to do? It's like they were never going to, it was a non-event in the first place. See, last time we had a stagflation situation, Paul Volcker had a tool in his tool chest that we had never used from the Fed. They just said, okay, well, we can use this tool here. And now they got to use it in the past to raise rates to 20%, and that stopped inflation and brought it down. But now they don't have that tool anymore. They've used all the tools in the tool chest. They've printed money to infinity. They have dropped rates down to 0%. And now they can't raise rates or else they're going to go bankrupt. You literally, they're stuck. They can't even raise it more than 3% if they do that. So to stop inflation that they say is 7.5%, we all kind of know it's a lot higher than that. If you actually use the real CPI data that they used back in the late 70s, early 80s, it would show that it's around 15, 20%, maybe higher. Not financial advice, just my opinion. Disclaimer. But it's crazy that they have no options now. So what are they going to do? What exactly can the Fed do here? They're going to raise it a measly 0.25%, 0.5%. That's going to stop inflation. Interesting. So they can't do what Paul Volcker did. It's like we're going through the same stagflation crisis that they went through in the late 70s, early 80s, but we don't have the tool in the tool chest to stop it. All that they have done is poured more gasoline on the fire. Pun intended, I guess, because this video is going to be about oil prices. So all they did is pour oil on it, and they have nothing but fire to fight it with. And they've already pretty much done everything that they could to create this into being a worse problem. And now you have oil skyrocketing, ironically enough, on the day of the State of the Union. Yeah, you can't even make this stuff up. It's insane. But let me go to the charts real quick, show you what I'm looking at. So the price of oil right now has look at this candle up. So this is the year chart on the price of oil. Oil at the beginning of the year was down around 57 a barrel. And if this doesn't show inflation, I don't know what does. Pretty serious. So we can go back to the beginning of the year, beginning of 2021, till now. Ironically enough, right here, inflation was actually at 1.4%. CPI data was at 1.4% at this exact point on the chart, if you can believe it. This is when CPI data is at 7.5% for what we're told. Probably it's a lot higher than that, but we're told 7.5%. So if that doesn't show the amount of inflation that's going on, I don't know what does. But let's go back to, let's say, the 1 month chart to really show just how much of a skyrocket we're seeing here in the price of oil. Pretty intense. It's pretty intense. That's the 1 month chart. Let's pull up the 5-day chart. So here's the 5-day chart. And ironically enough, this last day or two here is when we broke over 100 a barrel and really sliced through it like butter. And now it's actually just like sitting up there at 108 a barrel. Pretty intense, pretty intense. So this is going to be, I think that we're not going to just see oil skyrocketing, but across the board, I think we're going to be seeing all commodities going up. I think we're going to be seeing gold and silver going up. Obviously, I think I'm a big bull on palladium. As you know, on my channel, I've been big on palladium for even before all of this going on overseas. Right now, I was a bull on palladium just based on the shortages of it since 2012. I just made a video yesterday, if you haven't watched that yet, on palladium, where I went over the details and gave my analysis of the palladium market. But platinum, palladium, I think, are extremely undervalued. Silver, extremely undervalued. And I think those three metals have to catch up to gold. And I still think gold is undervalued as well. Gold's going to go up at the same time. So gold will probably be the slower horse in the race. Break over 2,000, go to 2,100, 22. Not financial advice, but I think that silver, the silver to gold ratio, I feel like it's going to tighten as they go up. I don't think gold's going to go down to tighten the ratio, and I don't think silver's just only going to go up to tighten the ratio. I think they both go up, but silver just is a better performer to tighten that ratio to what I believe will be around 30 to 1. Right now, we're about 75 to 80 to 1 on the silver to gold ratio. That silver to gold ratio, I see that tightening right there, so I still think silver is extremely undervalued. Little bit of a pullback right now on silver, but we did have a really, really strong day just recently where it jumped up nearly $1. So let me pull back, show the 5-day chart on silver. So as you can see, silver had a really nice day around here, down in the 24s, jumped up back up to 25 range, has a little bit of a pullback going on, but I think it's ripe for a pretty big jump in silver, and I think platinum as well is ripe for a big jump. That's at least my thoughts on those. What's interesting right now is the broad market is pulling down, and then we're seeing oil and commodities skyrocketing up as the broad market pulls down. Bitcoin had an extremely good last few days here. So let me pull up this is the 1 month chart. Let me pull up the 5-day. Random spikes in the price of Bitcoin with all of this going on. So as oil jumps, as precious metals are jumping, we see Bitcoin starting to jump as well. That tells me what I think is going on are people realizing that they don't actually have custody of their money. And people are getting nervous that in the digital realm, they don't have custody of what's in their bank, and they want to have custody of that. They're doing whatever they can to get their money out of the banks. And this is after Canada froze people's bank accounts. So I think that narrative is really being pushed where people are realizing they don't have real custody of their money, and they're doing everything they can to protect themselves from inflation. And I think we're seeing that with Bitcoin's price. We're seeing that with precious metals. I don't know who would want to buy a bond right now. I know about 70% of the money in the bonds market is locked up there and they can't really do anything about it. But ironically, I mean, the bonds market is over $100 trillion worldwide. In the US, it's around $40 to $50 trillion sitting there. Even if 60, 70% of that is tied up and has to be in the bonds market because there's certain rules and regulations where they have to have a certain amount of bonds. Think about that. You have 110 or 100 some odd trillion out there, and 30 to 40% of it needs a place to go, and they're dealing with inflation that's going to be out of control. That money is going to flood out of these bonds here. Who wants to hold a 30-year bond and get their money tied up for 30 years just to make a measly 2%? Who's going to do that? So what I think is that some people have told me that there's a good amount of money in the bonds market that has to be tied up there. So around let's say 70% of it has to be tied up. Even if it's a measly 30% of that 100 trillion plus space, you're talking about 30 trillion plus that needs to find somewhere to go as a safe haven. I think that money is going to flood into gold, silver, platinum, palladium, Bitcoin, and you're seeing now that oil is going to trigger more inflation, in my personal opinion. So let me go over, I've shown this chart quite a few times, so I'm sure people are getting bored with it, but it really does prove what's going on here. So in the 70s is the last time we went through an inflation cycle like this. This is when we had stagflation, was in 1979. This is the year over year. By the way, it got up to like well over 15% when you talk about the individual months. So this is the year over year inflation. And here it shows it was up to 13.29. Paul Volcker raised the rates here in 1981 to 20% and was able to get it back down. Now we're seeing inflation out of control. They're not using the same CPI. If they did, it would show that it's way up here, but they can't use. The problem is they don't have the tool in the tool chest that they used to have to drop it down by raising rates up to 20%. Could you imagine if the Fed changed their narrative from, oh, we're going to stop printing money and we're going to raise it a measly 0.25% and we're going to change that to actually 20% like Paul Volcker did to stop inflation? Markets would absolutely plummet if they did the right thing, and they wouldn't even be able to pay that in the first place. They wouldn't be able to pay the interest on that. So the reason they can't pay that is because look at our national debt clock. We're well over 30 trillion. Like, this is the reason I wanted to go live and do this video, and I appreciate everybody for hitting the like on my videos, because even though we only have 83 people in here or something, I know that a lot of us watch the State of the Union and go, okay, what are they talking about right now? Here is the State of the Union. This is the State of the Union. You have, ironically, you have oil skyrocketing on the same week, same day as the State of the Union. And then at the same time, you have record inflation, and you have a debt that's higher than ever before for the nation, up to over $30 trillion. And this is what they're talking about. Oh, they have the audacity to stand up and clap? Like, who's clapping? You want to know something interesting? I want to know this. This is the information I want to know. If I want to protect myself from inflation, I want to know what every single person clapping at that address has on their balance sheet. I want to know what stocks they're invested in. And then we're going to be protected. We're going to make some serious money if we know what those individuals clapping have invested in. That's how we can protect ourselves from inflation, because they're sitting up there. They know something that they're clapping about, because I don't know what they're clapping about, but they're clapping about something. I don't really know exactly what it is, because from what I could tell, oil is literally what causes inflation. We have a situation where there is the other thing that I didn't bring up yet is Russia is the third largest producer of oil. So the Saudi Arabia, I believe, is number one in producing oil. The U.S. is number two, and then Russia is number three on production of oil. The thing that people don't talk about, though, is they're number one in exporting. So Russia makes oil and immediately exports it, and they're the number one exporter. So much of the oil that goes to, Europe comes from Russia. A lot of the oil worldwide comes from Russia. They're a big exporter. They don't keep it, they export it. And they probably do that because they know that really oil is money, because the dollar is backed to oil. The petrodollar is basically what gives the dollar value. And I think that's the bigger cheese. That's the bigger prize here, is what is the reserve currency of the world? Who holds the oil, holds the power, so to speak. And I think that is something that's going on right now. When the world's largest exporter is doing what they're doing right now, it's only so obvious because guess what? They put sanctions on everything, but what would actually hurt Russia? What would actually hurt them is if you put a sanction on oil and energy. But they didn't put a sanction on that. You know why? Because it would cause inflation to go out of control. It would cause oil to go through the roof, and it would cause inflation to go out of control. So they're doing that to protect themselves. And that's actually what I think is like a power on the chessboard. That's like the queen of Russia on the chessboard, in a way, is that they hold energy and they can control energy exports, and that can really affect other nations. So that's their queen. And then what we did is we took all their pawns. We're like, okay, we'll take your pawns. And it's like, well, we have our bishop, our knight, our rook, our queen. We have all the really good pieces. You took a few pawns off of our chessboard, so you're going to not let us export vodka? Oh, okay, I guess that'll stop us. I'm so sorry about that. Our bad, But what oil's cool. Oil's okay. Where the billions and billions of dollars are coming from, that's cool, though. All right, sweet. And then meanwhile, you got our you got Joe shutting down our pipelines, talking about how made in America. And I don't like getting political. I'm not a big fan of being political. I'm a libertarian. I don't stand right or left. I stand libertarian. I believe that we should have a government that is smaller the way it was designed by the founding fathers. It was meant to be a small, limited government, to not have this big of a position in society. It was supposed to be small and limited, and that's what I believe in. So I don't like being political on my channel. I don't like picking sides and doing all of that, but it's outright ridiculous to say we're going to push a narrative of made in America while shutting down the pipeline, importing our oil, begging OPEC for our oil, getting on our knees to get our oil from other places while shutting down our pipelines. Like, who are you exactly fighting for? Who are you? Our dollar is back to oil, and you're shutting down our pipelines while exporting it from other places and begging them to pump more in other places to export it to us. And you're pushing a narrative of made in America? Well, it used to be made in America. Why'd you shut it down? We had it. It was dialed in. We were energy independent. And it's like, it blows my mind that is the situation that we're in today. It's like, and the amount of jobs that were lost, the amount of power that we lost by needing to export our energy, it's wild to me. As much as I'd love to snap my fingers and be all renewable energy and have solar panels everywhere and be completely energy independent that way, I know it's a process. You can't just snap your fingers and boom, overnight you have renewable energy running the whole country. It's going to take years, dozens of years to do that. And in the near term, why are we letting other countries get rich off of us needing to import oil? Why don't we make our own oil and even export it and make money off of it? Why are we making other countries rich and powerful? That makes no sense to me at all. And meanwhile, that is the thing that holds the value of the dollar is oil. It's back to oil because it's not back to gold. Ever since we stole the world's money and exited the Bretton Woods Agreement, we basically, it's like we stole the position of the reserve currency of the world. And I'm scared talking about this kind of stuff because I've noticed that randomly subscribers on my channel goes down, and it's not. I don't think it's due to them clicking unsubscribe. I think there's other things going on right now, and my videos they don't tend to get pushed sometime when I talk about these kind of things. But you know what? I don't really care anymore. I'm just going to say it like it is, and it's crazy to me that we exited the Bretton Woods Agreement, told everybody that we're basically just going to steal their money. It's no longer back to gold. And now we're the reserve currency. And 50 years passed since then. So 1971 came around. They exited the Bretton Woods Agreement. None of the money's back to gold anymore. And we had all the world's money. So we told the world, hey, we got a lot of gold, guys. We got a lot of gold. So trust us with your money. Here's some pieces of paper as IOU notes. You can trust us. Right? We got gold. It's back to gold. And then we basically just said, oh, no, not back to gold anymore. Just kidding. Just kidding. We'll keep the gold and it's not back. It's not redeemable. You can use our dollar. And we have a lot of weapons and stuff, but it's back to oil now. Haha. We get the gold and we'll keep your gold, not redeemable to gold, but it's back to oil now. And now we are turning off our oil productions and needing to import our oil, get on our knees to OPEC to get our oil into the country. And meanwhile, that is literally what caused inflation of the past. What caused inflation in 1979 and 1981, that entire crisis was caused by a supply shock of oil. It was caused by them not having enough oil for all these cars. And think about how many more cars are on the road today. Like, how many more cars are on the road today than there was in 1980? You know, and you have these pictures of cars lined up around the block trying to get gas from gas stations and prices going through the roof. And I just think about it today and I go, just the price of used cars is through the roof. Imagine when we have a supply shock of oil and everybody needs to get oil for their cars. There's going to be lines around the block to get oil, and it's going to be trading at $10 a gallon, $20 a gallon at this rate. Who knows what could happen in the future? Again, just my personal opinion, not financial advice. Everything that I say on my channel and all of my videos is meant to be taken as just my opinion. So full disclaimer, not financial advice. All opinions of myself could be completely wrong on the things that I say. So whoever's listening, clip that disclaimer. But it's crazy to me. It's absolutely crazy to me that we're in a situation that literally has caused the worst inflation that we've ever gone through in the U.S. And we also are going through it's not just that they say it's 7.5%. It's that we've gone from 1.4% in the beginning of January 2021, and in less than a year went to over 7%. It's the rate of increase of that inflation that is very scary, because put it this way, if inflation, let me go back to this chart over here. So when I pull up the inflation here, if we go from if we basically do the same length of growth, see at the beginning of 2021, actually down here it was about 1.25 or 1.4% was the inflation rate. Then it went to over 7%. So if you did that same rate of growth, that's around 4 or 5x, right? So imagine you 5x 7%. You're at 35% inflation. So if it had the same level of growth year over year, now I'm not saying it's going to do that, but I'm just saying the rate of growth of going 4 or 5x in less than a year, if that does it one more time, boom, you're at 35% inflation. So that just goes to show you how fast and rapid of a growth that is when you think about it from a percentage basis. So that's a huge stat, is just how fast it jumped up. That's what's scary to me. And then now, I mean, do you think inflation is going to slow down with oil doing this? When we pull up the yearly chart, oil it's nearly doubled over in the last year. So if oil is up nearly 100% in the last year, then what does that mean for inflation? And what does that mean to the supply, especially when the largest exporter in the world is no longer exporting, or whatever they decide to do with their oil? If they turn it off, they hold it, who knows what's going to happen, but they're in the position of power as a big exporter worldwide. So do you think this is going to slow down? What do you think is going to happen? Do you think inflation is going to slow down because gas is through the roof right now? It's proven to cause inflation in the past. So what exactly do people think is going to happen here? It's crazy. And I think that it hasn't really set in yet just how bad inflation can get, because I think it'll start people really start feeling inflation when they see the gas prices, because that's something you see like on a weekly basis, depending on how much you drive. People go to the gas station, they see that. They go to the grocery store, they see that. So that's when you start seeing the effects of inflation. But then what's really going to start getting the scare factor, and I want to talk about my hot potato theory on my channel. I have kind of coined the phrase hot potato theory, which is basically what I think is going to happen with the market. And actually, that's something I should bring up in this video, is the dollar index. But what I think is going to happen is I think people will realize how serious inflation is once it breaks over 10%. And that's on their metrics, on the metrics we're told. When the real metrics, I think, are well over 20%. Say it goes from 7.5 where it's currently at. Keep in mind, they're probably going to report soon, and then it's going to be 8.5, 9.5. But if they get up to over 10%, and then you see oil going through the roof like this, that's when I think the scare is going to start setting in. And that's what I think. What I think is going to happen is, I should pull that up really quick before making this point. I want to show the dollar index, and I've been talking about this on the channel for a while. People often thought I was crazy because I said the dollar index is probably going to strengthen. You know, a lot of us have thought that the dollar was just going to crash, but I've been saying over the past few months, if not longer, that I think the dollar is going to strengthen. So this is the year chart on the DXY. Let me pull up like the 6 months here. The dollar has only strengthened, and during this time, we're seeing the dollar strengthen. What I think this is people considering the dollar like a risk-off asset. They're scared about how high equities have gotten. They're scared about the uncertainty of a possible recession that's imminent, and they're taking money off the table. And in that process, it shows a strong dollar. But what's scary this time around, and this is where I coined the phrase hot potato theory, is when this gets higher and higher and higher, what people are going to feel is the pain of a high inflation rate as they're sitting on cash. So that cash is getting burned on both ends. And you're going to hold it in the near term. Cash is king maybe in the near term, but eventually when inflation sets in and those numbers keep getting higher and higher and higher, gas prices keep going up, and all of a sudden inflation is well over 10% on their numbers. On our numbers, probably over 20%, but let's say on their numbers, that's when I think people are going to get scared here, and they're going to dump the dollar and they're going to go into risk-off assets. That's what I think is going to happen. I think they're going to dump the dollar after it goes up near term, and they're going to need a place to put their cash before it burns. So that's the hot potato. So you're holding the hot potato. You want hot potatoes. You want the powder dry to throw at something. Cash is king. But if you hold it too long and you're losing 10% year over year in buying power, you're going to get burned. So you got to do something with that dollar. And I don't think it's going to go into the dollar and back into a lofty, overvalued market. I mean, just to show how lofty the market is, people say this is a big pullback. I mean, look at how much the market has jumped since they started the printing press. This market has a lot of room to fall. We've been talking about it since around here, but it's like, look how much room the market has to fall. I think that it's just a matter of time before it just plummets. But if you're getting into the dollar, you're selling your equities up here at these lofty levels. You've already enjoyed a huge gain in your in tech stocks, which is what we're looking at right now. Are you going to go back into that sector? Are you going to take the money, put it into dollars, and then go, okay, I'm going to go put it back into the stock market now? I don't think so. I think they're putting it. There's a reason why Bitcoin jumped at this time. There's a reason why gold and silver are jumping right now. Platinum, palladium, and everything is going up. I have a feeling that they're going to leave this. They're selling out of the stock market. It's going to continue its trend down. They're going to go into the dollar. So they're selling out of the stock market, going into the dollar. Dollar shows artificial strength because they're selling again out of the overall market into the dollar, and then they're going to go from the dollar into risk-off places to put the money. And this might include real estate. It could include their own business, could include things like that. But I highly doubt they're going to sell off the stock market, go into the dollar, and go back into risky equities right now. I just don't buy that. So that's what I think is happening, and I think people are really scared about how bad inflation really is. So that's pretty much what I wanted to go over in this video. It's only, again, it's like, it genuinely makes me feel like we're in some sort of simulation, because it's like on the day of the State of the Union, we have an exact scenario of what caused a stagflation environment in the past. We have a supply shock, and you have the largest exporter worldwide doing what they're doing over there. I'm trying to be smart about the types of words I use to describe it, but they're doing what they're doing over there. And they're the largest exporter of oil. So the first largest exporter, the third largest producer, and the first largest exporter, it's pretty smart to be the third largest producer but the best exporter. That's interesting to me. You have that situation that causes a supply shock. If that's not a textbook supply shock, I don't know what is. And when you study stagflation, if you Google stagflation, it'll bring up how there was a supply shock. There's some sort of catalyst that triggers it. And literally the same catalyst that triggered it last time is here again, and it's oil. And it's here in a very serious way when the largest exporter is doing what they're doing. And then you're talking about, like, if they really wanted to hurt, the thing is, to hurt them, you would have to put a sanction on oil. All of the nations worldwide would have to put a sanction on energy, but they can't do that. So that's a very scary scenario. That is chess. That is 3D chess we're seeing in action right now, because if it wasn't chess, they would just sanction everything. But why did they not sanction oil? Maybe because they have a strong piece on the chessboard there, and you can't do that without hurting yourself and shooting yourself in the foot. That's pretty much what the situation is. It's wild to me. And so I don't know what people are, when I've heard some people say that they think inflation is just going to slowly dwindle out, and I'm going, what? And then in the State of the Union address, I can't even believe, again, I don't like to be political, but he literally says, and I posted this on my Twitter, I quoted it, I'm probably going to butcher it right now, but said something along the lines of, I know how to stop inflation. You just pay people more wages and you lower the price of goods. That's all you got to do. That's my idea to stop inflation. Yeah, inflation's out of control, but this is how we do it. We just pay less, make your stuff cost less. Come on. That solves the problem. Come on, man. Just make stuff cost less. Make stuff cost less, and you increase people's wages. It doesn't matter about record inflation or anything like that. It doesn't matter that we shut down our pipelines and we need to beg OPEC for our oil and all of that. That doesn't matter. The price of oil through the roof right now, that doesn't matter. Just lower your costs on American manufacturing, make it made in America, and make sure you pay more wages for people to lower the costs for you at the same time. Boom. Inflation solved. That's how we're going to do it over here in this leadership. Inflation solved. He literally said that. He literally, quote unquote, said something like, I put the actual quote. That's me butchering it and making my statement, so don't quote me there. But literally, you know what? I'm gonna read the actual quote just so I can put it on, like, get this exactly right. Let me actually, I put it on my Twitter, this quote. It's pretty wild. It's pretty wild. This is literally, so now I actually can say this is quote unquote what he said in the State of the Union. It says, one way to fight inflation is to drive down wages and make Americans poorer. not my words. This is quote unquote. So one way to fight inflation is to drive down wages and make Americans poorer. I think I have a better idea to fight inflation. Lower your costs, not your wages. Like, if that isn't the most political statement I have ever heard, like, unbelievable. I think I have a better idea of how to fight inflation. Lower your costs, not your wages. Yeah, Joe, that makes a lot of sense. That makes a lot of sense. So it doesn't matter this is how you stop inflation is you lower your costs. Even though inflation is through the roof and exports are going to cost more and more money with inflation, you just lower your costs. Make sure you make it where it's more expensive, made in America, make it where it's more expensive, where inflation really hurts, and then pay your workers more wages, and that's how you're going to stop inflation. You know why he says something like that? Is because that appeals to a broad audience of the working class that doesn't know better. That appeals to an audience that goes, yeah, we should have more wages and your stuff should cost less money. Who cares about capitalism or how a free market works or anything like that, or how inflation really affects the world? Who cares about all that? You should charge less money for your stuff, and we should make more money for the work we put in to make your stuff. That's what should happen. That's how this world works. It's like, who taught you anything? Did you ever study economics? Do you understand anything about monetary theory, or do you just literally say blanket political statements to try to make yourself feel better? Are you even going to remember the things you said in 6 hours? Because most of it was outright ridiculous. I don't know, but I'm going off a little bit because that just made my blood boil. And quite frankly, I don't like to govern myself when I do these videos. But the more people like my videos, the more people share my videos. They can't stop it anyway. You know, maybe the algorithm doesn't want the real information out there, but you know what? We're going to hit the like button and we're going to get it out regardless. One way or another, Toad, my lucky Toad's over there. If you don't know him, he's getting pretty famous over on the Instagram. Make sure you follow me on Instagram at Rob Sultan on Instagram, because there is where I can give out more notifications on the story and actually have another way to contact people outside of just one platform, if you catch my drift. So really important if you could follow me on Instagram at Rob Sultan on Instagram. A lot of cool pictures of all the collectibles and stuff I do. This is just eye candy for clickbait. So if you're wondering what that is, it's a few 100-ounce silver bars. I like to put some stuff in my videos because ADD things and whatnot. And obviously got some clickbait right there. And I think silver is extremely undervalued. Really happy to see silver over 25. But I think it's a matter of time before silver actually catches up to gold on how much gold has recovered to all-time highs, and then silver has not recovered to all-time highs. So I think that silver could easily double here and catch up to gold much faster, make that gold to silver ratio tighten. So I'm actually very, very bullish on silver, and that's why I brought it out, because I think it's one of the best inflation hedges you can get. That's how I personally protect myself from inflation, is with industrial precious metals that are needed. So here's the irony. So just like you got Russia over there, they grab something that is an industrial thing. The world needs your gas, your oil. They need your natural gas. They need your crude oil. They need it. So that is going after an industrial space of needed things globally. You don't just make up things and go, oh, our money's worth money because we said so, and our money's strong because we said so, and that's why money's money. No, I think that you need to put your money and place your bets in things that are actually needed by the world. So just like Russia is placing its bets on oil and energy, I place my bets on industrial precious metals that are needed by society. Obviously, I can't go get oil or anything like that, or I probably would go after that. But the fact of the matter is, I like to hold industrial precious metals like silver, platinum, palladium, because I know they're going to get eaten up by the industry. I know the worldwide space is going to need these precious metals to build what they're building. So that's why I think silver is so undervalued. That's why I think industrial precious metals are undervalued. And I think that it's just pure greed holding down the prices right now at the paper markets, because these specific electronics producers, things like that, need the price to stay suppressed. But let me show you real quick. So one of the most bullish things that makes me so bullish on silver is when we pull back the chart, the prior all-time high was known in 2011. There was another all-time high recently that held just barely for a short period of time, and then it crashed back down. But it did break to nearly 2,100 an ounce was the all-time high. But when people talk about the all-time high in gold, they talk about the 2011 bull run. So what's crazy is in 2008, the market sold off. This is the recession here. And then it went into the dollar index at the same time. So it went into the dollar index. Money goes out of the dollar index into precious metals, into gold. So literally, this is where I developed the hot potato theory. And if you hear people saying hot potato theory came from this silver squirrel, a lot of big names are using my phrase right now of hot potato theory. Been saying that for a long time. I'm glad some bigger names are saying it, but start giving me some credit for that, you know? Sorry, my ego of the hot potato theory. But this is what it went into the dollar index here, goes into gold, and the all-time high of gold in the past was a little bit over 1900, around 1920 was the all-time high. Now gold is literally back at that prior all-time high. It's back at that 2011 all-time high. This is back when the gold to silver ratio was 30-1. Gold makes it back to that prior all-time high in 2011. Now remember this chart. This is 2011, prior all-time high in gold. Gold is back at that all-time high. Now we look at silver. All-time high was just under 50 an ounce in 2011, but look at where we are today. We have not recovered to the all-time high like gold did. Gold recovered to the all-time high that it was in 2011. Silver did not, which is, to me, I think that this gaps up big time, goes up over 50 an ounce, and I think gold goes up over 2,000 an ounce, but I think it tightens in that way where this is silver, this is gold, and it just tightens like that. That's what I think happens, and it all just keeps going up. That's what I think is the trend that I'm looking at. Palladium is just a wild card. Let's just be honest right now. Like, palladium just does its own thing. It's kind of like rhodium. Palladium just doesn't care about anything, doesn't care about prior highs, just is a rocket ship. So I'm just one of the weird precious metals guys that likes palladium a lot, because I just know that it's going to be in an extreme supply shock. Even without what was going on, it was going to be in a supply shock. But now it's going to be in a major supply shock for palladium. And the thing that I think is going to happen, in the near future is not only are people buying silver and they're buying palladium, they're buying platinum, they're buying gold, but I think actual companies are going to start buying the industrial metals that they need for their business. Like, imagine you're in Tesla's position right now. You're sitting with well over 10 billion on your balance sheet in just liquid cash. You hear news that inflation is through the roof, and you have all this cash sitting on your balance sheet. Like, why would it be a bad idea to go, you know what, we need a lot of silver for our electronics in the cars, and the solar panels use a lot of silver. Hey, Elon, why don't we just buy a huge silver position while we can? Silver price is really low relatively to where it's been in the past. Inflation is through the roof. Silver is a good hedge against inflation. We're going to need it in our industry. We're going to use it all. So why don't we just accumulate $1 billion silver position? Maybe more. And I would imagine that's going to be a very smart play. They bought already a big Bitcoin position to hedge themselves against inflation. But I think it would be an even better decision than for them specifically. Maybe some companies like MicroStrategy, it's a good idea to only hold Bitcoin. But for Tesla specifically, to put themselves strategically ahead of their competition, I would be buying not only silver, but I'd be buying the cobalt I need for my batteries, the lithium I need for my batteries, the aluminum I need for my cars. I would be buying all of these materials if I was in that position. If I had a huge cash position, I know there's going to be supply constraints. I know inflation is through the roof and going to make my supplies cost more money. That puts me at a huge advantage if I just stockpile all of the things that I need to make mass-produced cars and to mass-produce solar panels. This could include glass. It could include all the things that they need to stockpile those components. It would be huge for them. So excessive inventory right now is what I think companies are going to do. I think it's a very good idea to have an excessive inventory. Now, for palladium in specific, this is something I actually forgot to talk about in the palladium video. I made a good video talking about all the details of why I'm bullish on palladium. But one of the things I didn't bring up in that video is that I think if I was, say, Daimler, I think I pronounced that correctly, Mercedes company, if I was BMW, if I was, all of these Nissan, all these companies worldwide, or all these auto companies, and I knew that the government makes me have a certain, my cars can have a certain emissions. They have to be low on emissions in today's world. That's what the governments are pushing. So that's why palladium has been in a deficit for over 10 years. It's been in a deficit. Now, we know there's going to be a supply shock in palladium because 45% of it comes from Russia. So a huge amount of the oil of the world comes from Russia, but also a huge amount of the palladium in the world comes from Russia. 45%, it's the number one producer by a landslide of palladium, and car companies need it. They need platinum and palladium, specifically palladium. If I was one of those auto manufacturers and I know that oil prices are through the roof, inflation is going to go rampant, and then also there's going to be a supply shock on the component I need to have low emission vehicles, I'm going to stockpile that. If I have billions of dollars sitting there in fiat money on the balance sheet, and I know I need that, and I know there's going to be a supply shock in it, and I know it's out of control, it's not just that there's going to be a supply shock, it's that these companies are going to start accumulating and cornering the market. Maybe I'm just a competitive individual. Maybe I'm competitive. So like in the collectibles business, I'm always very competitive. I like to be a closer. I like to get the deal done. I like to outdo my competition for items that I want. I'll pay more for items that I want. Very competitive. But if I was an auto manufacturer, I would literally look around and be like, everybody needs palladium and platinum, right? The market's only, so big on above ground palladium and platinum and bullion that's even available. So how much money do we have on the balance sheet? They're all going to need this. Let's corner the market. And then maybe we can even sell to our competition at a premium. That's what I would do. Like if I was literally Dahmer or something like that, I would be like, okay, let's just accumulate a multi-billion-dollar palladium position. The price of palladium is probably going to go through the roof. If it doesn't, we'll just use it on our cars anyway. But what better place would there be if you're in that position? I would just corner the market, then call up BMW and be like, hey, buddy, you need a lot of palladium, don't you? Well, it turns out we got you covered, but you're going to need to pay us a lot for it. It turns out palladium's very expensive now, and you're going to have to pay us a big premium because there's none available. And we happen to stockpile a huge amount of it in our warehouse. So if you want it, you're going to have to pay me some extra money. Like that's what I would do if I was, and that I think that trend is going to be across the board in manufacturers. So manufacturers worldwide, not just in the States, not just in Europe, just everywhere, China, everywhere, are going to start stockpiling the precious minerals that they need. All the rare minerals, everything that they need for their production, I think they're going to start stockpiling it. And why wouldn't you? What, do you want to hold money that when inflation is out of control, that's already back to nothing? Like, what are you going to do with that capital? You want to go put it in equities? Like, what are you going to do as these big companies? That's what I would do personally. So I think that it's just a matter of time before we see that just start really, really continuing in a big way. That's all my thoughts really on what's going to happen in this current marketplace. But let me get to, someone just gave me a super chat for $20. I appreciate that. Thank you. So that was the only one, and I never missed those, so I appreciate that. Seth Holloway says, best YouTube channel out there. I appreciate you, man. Best YouTube channel out there, but we don't have the largest amount of subscribers or viewers, but you know what? We got the best ones. We got the best ones. And I don't care if they throttle my page. Like, I'm going to keep putting this content out. I don't care what's going on. It's like randomly, like if people saw my analytics and the stuff that I look at on the daily basis on the back end of the account, it'd be like, some interesting things going on there, Rob. Like, what is going on with this? And it's not just, anyway, I don't want to get into detail with it, but I'm just going to keep making content to the best of my abilities, and we will just rely on word of mouth advertising if you catch my drift. But I appreciate you saying that, Seth. Thank you. G-Dub, I appreciate that. Gave me $20, says, just sold my house because I'm expecting a crash. What kinds of percentages would you put into physical metals, Bitcoin, and cash? I can't give any financial advice, G-Dub, but I really appreciate that. So I can just put it this way. If it was me, if I was in that position and I just sold my house, I mean, real estate can be very beneficial if you had a way to make cash flow off of it. So if your mortgage is say $2,000 and you can rent it out for $3,000, then that is the best case scenario where you have $1,000 coming in no matter what. That's best case scenario. Now that's hard to do. It's easier said than done to have a cash flow scenario. But if you were in a position where your house was kind of just holding you down, sort of thing, and I have to say if this was me. So this is not financial advice. If it was me in this position and I sold my house and I wanted the cash, I'd be wanting to build a cash flow business with that first and foremost. That would be my first objective. How do I make cash flow consistently and have my own money printer? That would be number one. Then like how I personally would store the money is silver would be my biggest position, then palladium. I actually hold more palladium than platinum now. So palladium and platinum would be my next two. And then I would hold a big cash position because I think the hot potato theory is just in play right now. I think the dollar index could easily skyrocket to like 110, maybe even like 120. And people think I'm crazy for saying that. I even think I'm crazy for saying that. But I think it could go through the roof, and then inflation goes through the roof. So oil skyrockets, the dollar index skyrockets because people see the dollar as a risk-off safe haven, and they realize that it's not a risk-off safe haven, and then that money will flood from cash into precious metals, into even, I think it's going to flood into Bitcoin. I think it's going to flood into everything but equities. I think equities, and we're seeing a detachment right now, which is incredible. Just to go back and prove what I'm talking about here. So the NASDAQ is really kind of what I like to go by as a gauge of what's going on. So let's pull up the yearly. The NASDAQ has pulled back down. God, I swear, when I zoom out the chart, it doesn't even look like it's pulled back. Everybody's talking about the market's pulled back. It's not even, it's just getting warmed up. Like, I zoom in to try to show how much the NASDAQ has fallen. Like, oh my gosh, it's fallen so much. And it's like, has it fallen? Doesn't look like it. I mean, this put it in perspective. Like, it's insane to me. This is when the money printer started right here. It still has so much room to fall. But to show you what I'm talking about is, let's look at this period of time. So let's pull up, say, the 3-month. The 3-month chart on the NASDAQ will pull up, and it shows that, it fell from just under 17,000 down to 14,000. And this is a slight recovery here, but it's fallen down. Let's go from high to low. So high, it was just under 17,000. Low, it went down to around 13, 14K. So you got that pullback of around 4,000 on the NASDAQ. And at the same time period, so just remember, this is December when it was at its highs. So we go through the same time period with, say, gold, and we pull up same time period from December to now. We saw the NASDAQ go down, and then gold detaches. We haven't seen that in gold. We haven't seen gold detach from the overall market. We haven't seen safe haven assets. It usually runs parallel. So just to show you what I'm talking about, last recession that we were in, this is what happened with gold. So if I pull back to the last recession, which was 2008, so gold, God, it's funny, the recession doesn't look like anything when you pull it up, but it was actually quite a bit. Let me zoom in here. So 2008, 2009, this is the pullback in gold where it went from about 1,000 down to, I mean, if you look at it from a percentage basis for gold, it fell quite a bit. Fell from around 1,000 down to 700. I think because the candles are a certain way, it's not showing it too well, but in the recession, gold fell during the recession. It wasn't until after the recession that gold started going back up, and then did what it did and went to all-time highs there. But right here is when you see gold pull back. This time around, we're seeing gold detaching from the market, going up as that broad market goes down, which we haven't seen that before. So what that tells me is that money is flooding out of equities into safe haven like never before, and the safe havens are actually detaching and going up as that money floods out. So the dollar index to me is just going to strengthen that, where people flood from here. Ironically, the way I have it dialed in here, I think they're going to flood from here into here, and then also into, if I move into the DXY down here. So I think money floods from these into here, and then this actually holds up. Might even go to 110, 120 on the DXY, and then eventually that's going to fly out of that more into here. So all from here into all of these, and then back from these into here. That's what I think. And I don't know why I have Ethereum there. I don't really like Ethereum, so I'm just going to take that off. But some people might catch that and be like, wait a minute, you don't like Ethereum, so let me take that out of there. I think that's what's going to happen. It's going to flood out of here. Oil skyrockets, floods out of, also out of bonds. Like, who even holds a bond? I have no idea. The only reason you hold a bond is because you're forced to. If you're part of the 70% of banks and stuff that need to hold bonds on their balance sheet and are like legally mandated to do that, then fine, you hold bonds. But why would anybody that has a choice hold a bond? Like, if you have a choice to not hold that and deal with, you're getting, 2%? Like, who wants to lock their money up for 30 years for 2%? You lock it up for 10 years, you're only making 1.7%. That doesn't even stop inflation at all. So who is locking their money up in bonds? And this, people tend to forget just how much money that really is. Like, the amount of money in the bonds market is, again, over $100 trillion is in the bonds market. And yeah, a lot of it is locked up by banks being mandated and stuff like that, where they have to hold the bond. But if you take out the 70% and you focus on the 30%, I mean, you're still talking about 30 trillion plus, like 40 trillion dollars needs to flood out of that bond market somewhere else. So where is it going to go? I think it's going to go into tangibles. But that long rant to basically answer your question, G-Dub, that just goes to show you, if you give me a super chat, I'll go on a long rant on that subject. But I think that cash is king for the next few months. Like for like maybe the next 6 months at most, it becomes king, where if you have a large cash position, you have the potential to buy, or to get your business to run right and have your cash flow going well with the business. And then you also have the opportunity, if things really do plummet. It was really valuable to have a lot of dollars ready in 2009, for example. When the houses crashed, when everything crashed, having cash ready for that was a lot of people got very rich from 2009 to like 2012. People got very rich in that time if they did it right. So cash is king short term. This time around we have inflation, but what's also an interesting thing, and the reason why I wouldn't just hold cash and try to time everything, is we've never seen precious metals detach from the overall market like this. It hasn't happened like this. Like 2008, again, I showed you it all fell together. So if you sit on cash for too long and you don't hold enough precious metals or enough Bitcoin as well, it's like, what happens if those detach and continue going up and you're sitting on cash? Even though the cash still has good buying power, it's losing buying power in comparison to the safe haven assets because too much money's flooding into it at the same time and it's detaching and not going down. So, sorry, just to summarize that, I think that if the broad market crashes, what happens if the broad market crashes, say real estate even crashes too, but then precious metals go up in that time period? So there wouldn't be an opportunity to get in precious metals because they're going up, like they're detaching while that market corrects. Last time it all corrected together, so cash was just totally king. And then also you weren't dealing with inflation. So I showed this before, but if you go here, in 2008, in the last crash, they didn't even have inflation. Inflation was down at like 0.09% in 2008. So that's something to consider as well. Inflation wasn't really in existence back then. It wasn't nearly what it is today. I think it's actually, like, the funny thing is when I keep showing this, it's really like up here. Just my personal opinion. It's somewhere in this range. But in 2008, not enough people talk about that there wasn't an inflation crisis going on in the last recession. The last recession was just triggered by a housing bubble. It wasn't caused by a currency bubble. This time around, it's a currency bubble, which is a lot more serious. So cash was really, really king in 2008, 2009 because there wasn't inflation to deal with. Now you have to time it right, because if you're sitting on cash for too long, you got to deal with an inflation rate that's going to be well over 10%. And then if your money's getting burned on both ends, like that's a situation. And that's why I think this time around we're seeing precious metals detach. And the proof is in the pudding. It is detached, and it's continuing to detach. It's continuing that trend. So it's a hard answer to give you. Like, I have to say again, it's just my personal opinion what I would do in that position. I would focus on cash flow would be my number one choice. I would probably put 50% of it. So hypothetically, say I sold my house for $500,000. Let's just put that number out there. This is just a hypothetical, my personal opinion. If I sold my house for $500,000, me personally, I would put $200 to $250K into a business that got me a cash flow. I would put literally half of it into a business. Like when I first started Mineral Exchange, I put every dollar to my name in collectibles and items that I thought I could sell for 10, 20% more than what I bought it. And turned out I could. So my whole motto was always buy high, sell higher. And I'd always buy cool stuff that I knew other people would want, and I would tack it up a margin of like 10%. And if I could continue that cash flow, I knew that money pile. I actually wrote it down on a piece of paper, like how much it would turn into. So if I started out with 10 and I turned 10 into 11 and 11 into 10% more, and then I wrote it down on a piece of paper exactly how much it would turn into if I actually consistently hit my marks and consistently turn that money over like 4 or 5 times a month. And I started doing math, and I'm like, wow, that's going to go pretty quick. So for me, it's always cash flow first and figuring out how to run a business. So I put half of it there, and then with the other 50%, I'd be like 20% cash, 30% precious metals, Bitcoin. That's how I would personally be looking at it myself. So that's more of like I don't like to give bad answers, but So I was kind of talking, ranting for a little bit, but to actually answer the question, that's how I would personally, how I would do it. Not financial advice, how I personally would do it. Jerry loves Bitcoin. Jerry, my friend. Honestly, Jerry, Jerry made a video on his channel saying Rob Sultan for president. Ironically enough, today was the State of the Union. I'm a little young for that. I need like 7 more years or something before I'm even possible to run for something like that. But honestly, it was, I think that Jerry, that might have been the nicest thing anyone's ever done for me in my life. To actually like sit there and make a video for like 20 minutes. That was something else, man. I watched that video a couple times and I'm going, you know, how beautiful is it that we have individuals that are in different states that have the same beliefs, both want to be libertarian, are both libertarian minded. Jerry's a libertarian as well. And we want the same things in the world, and we're sick of being pulled apart. We're sick of the world trying to make us distant from each other and not have us be unified, and want a smaller government and have more power to the people and not have to be dealing with this division of left and right and constant divide and constantly being angry at each other as citizens in the U.S. And Jerry really explained it well in his video, and it was touching, man. And so here he's in the video right now. So everybody in this live stream, check out Jerry Loves Bitcoin. If you look up on YouTube, maybe write it down for after this video. Look up Jerry Loves Bitcoin, Silver, and Platinum and Gold. So maybe it'll probably just pop up if you just search Jerry Loves Bitcoin. I put it even on my Instagram story the other day and put a link to it. So hopefully that brought some people over to the channel. But honestly, really, really cool guy that is a precious metal stacker, believes has the same beliefs as me, and small world. It's a small world that we're finally starting to connect with other libertarian-minded individuals out there, and it was just a beautiful thing to see. So Jerry, that was touching, man. I can't even, literally, I think that's one of the nicest things anyone's ever done for me in my life. So I really appreciate that, man. And then he's here and he gave me a super chat. I haven't even read the super chat yet, but I just had to say that meant a lot to me, man. So he says, Hey, Rob, I want to get into the precious metals game, but not sure where to start. Have some ounces now. Thanks in advance. And he put the Rob Sultan for president. So how to get in the precious metals game? I get that question a lot. I have a weird story on how I got into the precious metals business, but the main thing is, like, I'm not only in precious metals, I'm also in collectibles. So my space was having I found there was a new market that had emerged, and it was the vintage bullion space. So like old school bars from like the early 1900s and like crazy bullion house bars that weren't in production anymore was starting to get collected and have higher premiums than average bars. Now every single bullion dealer knows about it now. So now you have to pay this big premium, and you have to make. It's a different game now, but at the time I had found an arbitrage situation, and that's why I went all in. I literally packed up I had all the money to my name, got in a car, and just drove across the country, went to every single shop that I could find, every pawn shop in the country, and I found all the vintage bullion, and they didn't know it was rare at the time yet, and I just started accumulating a huge position in stuff that I knew was really valuable, and I had a lot of big scores. So I was literally like a treasure hunter when I started. Nowadays, it's just more of a thin margin and moving large quantities of money. But it's hard to work up to the levels of that, because you need to make serious money in the bullion game. You need to be making, for example, like your margin might be 2-3%, and you might be making 2-3% off turning hundreds of thousands of dollars. So it's like, you need hundreds of thousands of dollars or a credit line to make that kind of money. If you want to make, anywhere from like 4,000, 5,000, 10,000 a month, if you're trying to get to that level, then you have to have a serious bankroll of around 200, 300K, something like that. But if you want to start from a small level, then you got to find like collectibles, like stuff that people are not valuing correctly, and be able to do arbitrage scenarios, garage sales, stuff like that, where people can flip money together to get a large cash flow together. So it all depends on how much your investment is. But if you're starting, say you're starting and you have a large investment to get into it, building an audience, building a reputation, everything. So I'd be on social media, building an audience. Should I even say how I built my audience in the beginning? Maybe I'll keep that story for another day. But I had like all kinds of arbitrage things that I did. I'm very competitive, so when I started my Instagram, like everything had to be perfect with Mineral Exchange. So I had to make the logo perfect, the design perfect, all these different things. And so I was just doing anything I could to build an audience. And even though I didn't have a lot of money when I was starting out, I think audience is key. And then as you get deals done, your reputation gets stronger and stronger. And then now my reputation is at a point where I can do deals now for large amounts of money, and I could not owe the money for a while because of my reputation, knowing that I'm going to pay that. So I have like lines of credit outside of regular lines of credit, so to speak. So I don't know. It's hard for me to answer that question, but I would say building an audience is key. It's key to anything. So no matter what you are doing, building the audience first, I think, is the most important. So having a social media presence, what you're doing on YouTube is very good. So if you get a larger presence there, then after that, then you can figure out a way to grow in whatever space it is, whether it's precious metals, whether it's, watches. The watch game is booming right now. I'm actually getting very interested in the watch game, a lot bigger margins there. But anything, whether it's a clothing company, whatever it is, just audience first, I think, is most important. And then after that, after you build an audience, get a reputation, then you start implementing and going into it from that perspective. But I don't know. I'd have to put some time into it. Like if I was starting at day one in precious metals and I had a certain amount of bankroll, like how I would do it. Because the funny thing is I'm in that game. I'm doing it right now. So people are bugging me because I haven't launched my website yet. So if you go to mineralx.com, it literally only has register or log in, but there's no items on the site yet because I'm still learning how to use a website. Like I've paid a lot of money, got my website coded, paid a lot of money, have my domains, have everything dialed in. But now I actually have to learn how to use the website, how to dial it in, how to upload inventory, how to do all these things, how to make sure all the regulations are in place the right way, make sure the AML is done, all these different things. It's like there's so many different things you got to do to get it dialed in that I'm eventually going to have it dialed in myself. But I can't talk from a perspective like I'm some sort of know-it-all. I'm not. A lot of the guys on YouTube, I've noticed in the precious metals game, they like show their hands. They're like, look at my hands, like. And so what I respect about you, Jerry, is you actually show your face on your channel, which is, I think that's a great thing. But I see all these precious metals channels like, look at my hands and my, a couple $1,000s worth of stuff here. And I'm telling you about precious metals and I'm telling you about these things. And I remember seeing that the first time and being like, I don't think a lot of these individuals don't know what they're talking about. They're just regurgitating information. Like they don't know the real bullion game. And so that's what inspired me to get into making these videos and putting these out there. I actually put a lot of the stuff of mine on hold. I haven't been doing as much sales as I normally have done. So I took a step back, focused on YouTube, focused on Instagram, focused on social media. And then now I'm implementing the website. A lot of people don't know how much work I just put on my website. I guess now the cat's out of the bag. If someone goes to my website, they'll probably understand what I've been working on because it's going to look a little different this time around. So you go to mineralx.com and you'll see what I've been working on. But that's actually a good time to say that. If you register, so if you go to mineralx.com, it'll say enter site, and then all you can do is register there. If you already have an account, you just log in. But you'll see that I'm launching something very soon on that site, and I guess you'll get a hint of what that is if you register and make an account there. So, I guess the cat's out of the bag. Jerry, look what you did. Look what you did. I didn't want to tell anybody about that until it was ready, and it's almost ready. It's almost ready. So it's going to launch in the next couple weeks here, but people think that I'm bluffing. Not bluffing. But my thing is like, I don't want to hire a coder to be doing like uploading inventory and do all of that stuff. I have to do it. I have to know how it works myself. So I have to take the time to actually learn how to use a website and not just be doing the sales like I traditionally do on a wholesale front. So I'm trying to get more to the retail. I'm more of a wholesaler where I supply a lot of bullion dealers. So there's top dog, I'm like middle dog, and then there's like retail. I'm trying to do retail and be middle dog as well. Like I'm trying to be in that space. So for me, it's getting the website dialed in, and that's what I'm working on right now. And so I've missed out on a lot of orders, missed out on a lot of stuff, but there's a saying where I think it was it Lincoln? I think it was Lincoln who said if like I had a week to chop down a tree, I'd spend the first 5 days sharpening my axe, And right now I've been sitting there sharpening my axe and I'm getting ready to go for the tree. So that's where I'm at personally. But I didn't even mean to rant. I always tend to rant, Jerry. So to answer that, I would start small and I would be looking for arbitrage plays. Like I'd be looking for plays where I'm looking, people would be astonished how much money, like Gary Vee has exposed this, where people would be astonished how much money is made because people are lazy. When you go to like garage sales or even coin shops, like when I first started, I'm almost like, people will judge me if I say one of the craziest things that ever happened to me in the coin business. Like, so maybe I got to save that story for a different time. Like some of this stuff I want to put in like a book or something, like of my craziest flips in the coin game. Like I have one flip when I was literally, I was like negative money at the time, living on like credit cards at the time, but I had like maybe say $2-3 grand at the time that was like liquid available to do something with. And I was at a pawn shop in Vegas of all places, ironically enough, Vegas. And they had these bars that were very rare and they didn't know they were rare. And it was a pawn shop. And I'm like, I don't think you've done your research. And long story short, I bought items that cost me around $500 and they were really worth around 10,000. And so I've had a couple crazy things like that where it was arbitrage plays. And I think that those plays still exist in the wild. You just have to look very hard at like garage sales, stuff like that. But I've had some plays where it's been just lucky scenarios of I did the research and somebody else didn't do the research at like a pawn shop, something like that. So that's how I got a lot of bankroll together in the beginning was knowledge. And anyway, people are going to judge me now. Like, how could you rip a pawn shop? How could you do that, Rob? It's like, I didn't care. The pawn shop paid half of what I paid, and I found out that they didn't do their research. It is what it is. And Gary Vee does this all the time. He goes to garage sales all the time. People are lazy. They don't want to go to eBay and check sold. You know how much money can be made if people look on eBay, search the item and look up sold prices, then screenshot that. You have a comp, and then you can flip it to somebody else and say, look, it sold for $100. I will sell it to you for $90. The last sale was at $100 a month ago on eBay. I will sell it to you for $90. Boom. And you pay $40 at a garage sale. Boom. And you do that multiple times. Like, people will be surprised how much money you can make in the flip game. But it's just total rant. Total rant. But I got a lot of those crazy stories, to be honest with you. Someone say, tell the story. I told it kind of. I don't want to go into detail on it because then the person I sold those items to, the pawn shop, all that stuff, they might dig into it at some point and be like, you bought those for $500 and sold them for $12,000. What the? Or I could be making it all up. Maybe it's not even true. You never know. Vacation time is in the house. Vacation time says, ask Boss Toad what precious metal is going to do best percentage-wise this year. What do you think, man? Hang on, let me ask him. Dude, that's how special he is. You pick him up, it turns off the light. That's what he's pure gold. So it must have the energy from my finger must have went through the motion sensor. I didn't even touch it. They see he's that powerful. What do you think, man? What do you think? People are going to think we're crazy here on a live stream on YouTube asking questions to a golden toad. But this guy, he's got magical forces. He's actually he's pretty much my boss. If he says to do something, I do it. I don't know. I pulled out silver. For the show, and we only have silver on the table, and he's gold. So I'm thinking, something tells me he's looking at me. He's got to look like it's silver. Seems like silver. I could have pulled out other precious metals for this video, and I usually will have like a palladium bar, a gold bar, but this specific one I only pulled out silver. He's on the silver now. I think silver is the one that he's choosing. That's his choice, I think. What do you think? Yeah. Yep. People think we're crazy, I'm sure. Yep. I think he's going with silver. But he pushed me into buying more palladium yesterday and today, so there's that. Bought another like 5-6 ounces. So actually, no, like 9 over the last few days. So he's pushing me into palladium too. So palladium and silver. That's what his choices are right now. Because he is the boss around here, and those are our top 2 holdings with Mineral Exchange. So I guess proof is in the pudding there. But I did do, actually, that's a good time to bring this up. On the channel, if you go to community, so if you go to the main profile, if you go to Rob Sultan, you look up the main profile on YouTube, and then you go to community section, there's a poll there. And I like to do those polls from time to time. And so that's a very accurate thing because, we have 26,000 some odd subscribers. Excuse me. And then the polls usually get 1,000, 2,000 votes on them. So I put every single precious metal. I put silver, platinum, gold, palladium, and rhodium. So I put all 5 of them there, and then I said, which one is going to have the best return on investment? And you can vote on it right now. So if you're watching this video, we got 153 people in here. Go vote on that. There's already probably a few hundred votes on it, and so you could get a pretty decent picture there of what precious metals buyers think will be the highest percentage return on in the last year. So that's what it is. Jeff Jackson says, I agree, best channel out there, real. I appreciate that, man. Thank you, Jeff. Everybody that says that, it means a lot to me. You know, I don't have a moderator. I don't have some of these live streams, people have moderators and they check comments and stuff, make sure only certain comments show up. Like, I have no moderators. I just do these live streams. I do all the posts myself. The reason my videos aren't edited is because I don't really like editing. I don't really, it's not that, like, I could probably learn how to do it, but I would rather just shoot a video and then just post it. That's how I roll on the channel. So there's really no editing on my videos. I just do them live. When I figured out how to do click this little button here and be able to show my screen on the left, that was an amazing thing for me, because that's where editing usually would be, is like to put in the charts and the videos and stuff. But I'd rather just do it in real time and then show it on my actual screen in real time. But yeah, there's definitely no editing in my videos, and there won't ever be. So it means a lot to me that people say that. I appreciate that. Go over a few more comments in here. I tend to want to do these live streams for like 30 minutes, and then I go for well over an hour, sometimes 2-3 hours. So we'll do. I always like to rant in the beginning of my videos. So if you watch my videos in the future, just know if you miss one of my live streams, the beginning is where the information of rants will be, and there's also going to be information in the questions. But some people, they don't want to stick around for answering questions in the comments. But if you come into the live stream, I like to answer some questions in the live stream, especially when people do those super chats. I never miss those. It means a lot to me, and adds up. So I appreciate that. But just know that if you're watching my videos in the future and you don't want to go through the comment part of the video, usually around like 45 minutes in, that's usually when I'll start doing the comment section stuff. So I appreciate everybody being in the live stream, especially on a Tuesday night after probably the most, like, that State of the Union speech was like, I don't even know. I don't have words for it. Like, after watching it, I've always thought that I'm in a simulation, and I could go on a whole rant of why I think I'm in a simulation, and I feel like I have proof of it. But if there's one time I felt like I was really in a simulation, it's when oil's skyrocketing through the roof, and the leaders are clapping for things that make absolutely no sense and have literally little to no financial understanding of economics or monetary theory or anything, really. Like, it was laughable. And to see people, like, I want to know what the individuals clapping are invested in. That's what I want to know. Is it like, what are the stocks? Like, let's get can I get like a ETF or some sort of fund around what the people clapping are invested in? Because those are the things that are going to protect me from inflation. That's what's going to do it, is if I invest in whatever the people clapping. I saw Pelosi out there going, and it's like, oh, what I want, whatever she's got, you know, I want some of that stock, whatever it is, whatever short positions, whatever puts you're in, calls, I want some of those, because you're clapping away. That's gonna be the place to go, because it was just like, who is clapping? What are you clapping about? Inflation is at all-time highs and can't be stopped. The Fed can't do anything about it. You have unrest happening overseas. You have prices of oil through the roof due to the #1 exporter doing what they're doing. The dollar is at risk of losing reserve currency status. There's so much uncertainty right now, and the audacity to stand up, clap, and pat yourself on the back is unbelievable. Unbelievable. Like, All right. Whoever's listening to my video, you can throttle my videos now. You can remove some subscribers or whatever you do, you know, for saying that. But it is what it is. It's the truth. Sorry, whatever it is. I'm losing it. Everybody. I'm losing it. But it's crazy. It's crazy. But it's like, isn't that ironic? Like, maybe that's supposed to be like, if this was a simulation or something, like, and somebody wants to put a sign out there for the individuals that are looking past the smoke and mirrors. So if you're one of us in this live stream right now, if we're a fellow silver squirrel out there, you see past the smoke and mirrors and you go, well, wait a minute, there's a sign right now. Oil skyrocketed at the same time as the speech is going on. oil's through the roof as the speech is going on. So it's like there's signs, there's hints there of what's to come. And with my channel, I just want to tell it like it is and say, I think that that is a perfect sign that stagflation is here and it's imminent. That's what I think that sign is. For it to go on the exact, it's too big of a sign. I think that the risk-off assets are going to skyrocket, detach from the overall market. The dollar index artificially gets strengthened. Then all of that money floods into risk-off assets even more. So that's my theory. That's my dollar hot potato theory. Maybe I should make a video specifically on the dollar hot potato theory just to put it out there, like a 10-minute clip or something like that. But to summarize it, I think money floods out of equities that are overvalued. They sell off. That money floods into risk-off assets and the dollar index. We see risk-off assets detach. The stock market crashes. Risk-off assets like gold and silver go up, detach, and this includes all commodities too. Risk-off goes up. Dollar index, the stock market crashes. Equities crash. Precious metals detach and go up. Dollar index goes up artificially. Then the dollar index floods out and goes into risk-off. In that whole time period, both dollar index and the stock market eventually go down, but all of it floods into risk-off assets. That's what I think happens. Like, that's just my personal take on it. So that's the dollar hot potato theory, summarized, kind of butchered it a little bit. But Bite Hunter, what is up, Bite Hunter? How are you? I appreciate that. Bite Hunter gave me a super chat of $20. Thank you. Again, I never miss those super chats. If I ever miss a super chat, let me know, but I don't think I've missed any of them. Bite Hunter says, can someone teach me how to give even dollar amounts here? I want to give 20, but I'm allowed to give only $19.99. Rob, do you have a plan on investing in crude oil? I don't know. Maybe they do that. I don't know why they do that and to make it $19.99 or $4.99 or something like that. I have that thing too where I like to see rounded numbers. I don't like going to the 99-cent store. Ironically, the 99-cent store is actually the $1.25 store now, if you didn't hear the news on that. So we don't even have a 99-cent store anymore. But I always thought it was kind of weird how they price everything at 99 cents and not just put it at $1 or even put 99 cents, just put $1. But now it's the $1.25 store. They literally did that. So there isn't a 99-cent store anymore. But Bite Hunter, do I plan on investing in crude oil? Like if I could, I would love to be an oil producer right now. Like if I was an actual like oil miner, that would be great. But I know that there was a very interesting time where it was arbitrage. What's crazy to think about, and I should pull that up actually. Let me show you. So if we go to screen share and I pull up oil, this was the time. Like there was actually an arbitrage scenario where oil went negative briefly. So let me pull that up real quick. It was absolutely insane. Literally, here it is. Yeah, oil went negative in April of 2020. So this is literally like when everything was while the shutdowns were happening. Like if you had call options right here and you put like a 2-year expiration on USO call options, oh my god, you would have made a fortune. Like 2-year expiration call options right there. Like this is the gambler side in me looks at that and goes like, why did I not see that at the time? What is wrong with me that I did not see that? That was just. People made stupid money on that in call options, like ridiculous percents, thousands of percent. But right now, if I was to get into oil, I mean, I guess the thing is like I want to have custody of my money. So what it comes down to is like how many people, I just wanted to show like how crazy it was that it bottomed out to being like negative for a second there. It was absolutely wild that happened. But what it comes down to for me and the reason why I don't have any money in the stock market, the only way I could invest in oils is via stock. So by buying stock in oil. But the reason I don't do that is because for me, it comes down to custody. Like what's the problem that we're seeing overseas right now? Literally people are going to the ATM machines and they're governed. So they have a govern on how much money they can take out of the bank and the banks are proving to be insolvent. So how do I put this? How many people have to get permission to get access to their capital? Like how many people in the world have to ask permission for it? You either say you want to get money out of the bank and you want to get cash out of the bank. You got to ask permission and you probably have to come in at a later date. If it's more than like 10,000 in cash, you have to come in at a later date to pick up that cash. That is also going to be reported if it's over 10,000. So you got to deal with all of that as well. So you have to ask permission to get your money, to have custody of it. And the reason why I like precious metals and I like Bitcoin and stuff so much is because I know that I have custody of it. I can sleep at night because I'm in charge of it. I have access to it. It's on me. So that's why I like having my money outside of systems. But if I was going to invest in oil, I think I would want to make it juicy. Myself, I would put like a 1-year expiration call option on U.S. oil. Like I would do something along those lines if I wanted to make kind of a juicy trade. Put a 1-year, like call options are bad when people gamble on the week to week, month to month. But I'd pay the extra premium to put like a 1-2 year expiration on an oil call option. That's actually an interesting play. Maybe I'll gamble a little bit, but I don't like to have a large, like say some people put 50% of their expendable income in like equities or something like that. Who actually has the custody of that money is TD Ameritrade or E-Trade or Scottrade or whatever that exchange. You're trusting with that money and you're trusting that they made the trade. You don't get to put your stock or whatever, your options trade in your pocket. You don't get to have custody of that. So you got to hope when the time to sell is. I know I'm kind of crazy and people think that it's like a doomsday vibe, but it's like seriously, when markets crash, you got to hope that Robinhood the app will work. You got to hope Thinkorswim or TD Ameritrade, the app will open. You know, you got to hope that they'll pick up the phone when you call to make the trade. Even if say the app goes down, the phone line goes down, or they have too many calls coming in, and you can't even get them to sell in time when you want them to sell. And then when you sell it, then you got to trust that it goes into the exchange. Then you got to trust that you can get it out of the exchange via ACH or check, or they'll mail you a check, or you'll get a wire transfer. You got to hope that system works, that they are solvent enough to send it from their bank, the exchange, to your bank when the time comes to sell. Then you got to trust that bank that it sent it to is solvent enough to give you the money, and there's not lines out the door to get the money out of that bank, and they don't go bankrupt. Remember, if the government didn't bail out Bank of America, they would have done a Lehman Brothers. Lehman Brothers didn't get bailed out. What happened to all the investors of Lehman Brothers? They got screwed. They went bankrupt and literally lost everybody's money. So you have to trust that the bank is going to be solvent. And then on top of all of that, if you're lucky enough to get that piece of paper out of that bank and you got it out, you went through that whole funnel there, got it from exchange to bank, and then you got it out of the bank. And you have to trust that the currency itself is going to hold value and the currency itself is solvent. So that's kind of how I look at it. I just look at the whole funnel of it and I go like, I don't even want to have anything to do with equities. It's like, it's not just about like making a percentage or making money on whatever it is that I'm invested in. It's that I don't trust that system. Period. I just don't trust that system. I don't like it. It doesn't marinate well with me. That's kind of how I look at it. It's like it comes down to custody. You could be a multi-millionaire, but how much money do you have that you don't have to ask permission to get? Point blank. Like how much money do you have that you don't have to go to somebody and beg to get access to it? You don't have to put in a login code or whatever to go into somebody else's app or someone, whatever it is, to sell it, and then hope that bank is solvent to get the money out. Hope that the dollar is not overprinted and is solvent enough to actually hold value in the world markets. Like all these different things. It's like, I don't like that system, and I stay away from it. It's kind of how I look. I look at it like I don't even want to have like all these ETFs and stuff. It gives up custody. And I think if more people understood what true custody means, we wouldn't have the problems that we have today in the first place. The reason why our money isn't sound, the reason why our money is fiat, is because we gave custody to somebody else. We trusted somebody else with the IOU. You know, so the government's like, hey guys, we'll hold your gold and silver. Here's some gold and silver certificates. See how they say redeemable to gold and silver? Oh, how fancy. We're going to take that away in 1971, and it's not going to say that anymore. But here, for right now, it says gold and silver certificates, and they're redeemable to gold and silver. And you can come to the assay office and pick up the gold and silver bars that I have, the real money, where it says assay office. If you go to my Instagram, I have pictures of those bars that I have, the little gold bar that I have, the 25-ouncer. That's an actual assay office bar that was backed to actual gold and silver, and then someone actually redeemed the real gold and silver. At that time, it was another country or something. That was after 1933, so some country or somebody redeemed gold, or asked for payment in gold. But that's the real money, and we wouldn't have the problems of this Keynesian economic world if we didn't give up custody to somebody else or some other entity. And so when you have an ETF, they have custody of it. Why do I not take the advertising from these different blockchain-based gold and silver companies because I think the idea is foolish. I think the idea is literally the definition of insanity. Like there's all these blockchain-based gold companies and there's more than one popping up. So that tells me that more than one company thinks it's a good idea for you to trust them with your precious metals and trust them that they will give you a digital token for them to take custody of your precious metals and then give you a digital token while they have custody in their bank vaults. Like what? How do I know that's real gold and silver? I'm not the one testing it. I'm trusting your judgment that you test it, you audit it. I'm trusting that you won't get robbed. I'm trusting that you actually are not stealing the gold and silver. Like the amount of trust that goes into trusting a custodian and then getting a digital token against it is completely against what sound money is. So I think more people need to understand, like, do you have access to your money? Do you have custody of it? Of even your Bitcoin. So say somebody has Bitcoin and they have it in Robinhood. You don't own Bitcoin. Point blank. Like if you own Bitcoin and you have it in Robinhood, you don't own Bitcoin. Robinhood owns Bitcoin, and you better hope they're solvent enough for you to sell it at the point you want to sell it. Period. You're not utilizing Bitcoin. You don't have it outside of the system. Like if you don't have your Bitcoin in cold storage, you don't own it. If you don't have your silver, like I have it on this table, you don't own it. Somebody else does, and you better hope that system works when the time comes that it needs to. So I don't like to have to ask permission for things. Like if somebody told me as a kid. Like, this is just who I am as a person. If somebody as a kid, when I was a kid, was like, you can't have the cookies on top of the fridge. There's actually one time my mom used to hide the cookies on top, ironically enough, would hide it on top of the fridge. And I would climb up there. And there was one time that there's literally a picture of me as a child when I was like 4 years old. And I'm hanging by my underwear by the handle upside down of the fridge because I went on the top of the fridge and took all the cookies that my mom hid up there. And I fell backwards. And luckily enough, maybe something saved my life at that point. Maybe that's why I think I'm in a simulation, because I literally was like hanging upside down by my underwear after I stole cookies on top of the fridge. So for me, if somebody tells me like I need permission for something, that's basically the first thought in my mind is like, how do I have to not ever talk to that person again? And I don't want to ever have to ask for permission again. I don't like that. It's not cool. Not good with it. You know? But anyway, see, and then I'm over here on live streams talking to my golden toad over here and having full conversations with my golden toad. Like, so people think I'm pretty crazy. I'm sure of it. So it is what it is. And honestly, we don't really care. We don't really care. I did say we. You know, it's my boss right there chilling on that silver bar. Normally he's over here. He's chilling on the table this time. Yeah, amen. And in Robinhood, there was actually a situation where I believe it was recent where Bitcoin was trading, like if Bitcoin's trading at 44,000, it was trading at like 40,000 to get it on Robinhood because you didn't get to utilize, you lose the utility. Like, so just like silver, you get a premium on it if you have the actual physical bar. We're starting to see that in Bitcoin because if you have it in Robinhood, they don't allow you to withdraw it. You can withdraw it from Cash App, you can withdraw it from Coinbase, you can withdraw it from Gemini Exchange, Binance, you can withdraw it. Robinhood doesn't allow you to withdraw it. So why is that? Do they actually even own the Bitcoin on the balance sheet? Do you know that they have it? I don't know. Like, we don't know what they're doing with that money. So it's scary that they don't allow you to withdraw your Bitcoin. So there's could be a full-blown like Ponzi shuffling act behind the scenes with Robinhood of like when it comes to custody of these things because they don't allow you to take it off the exchange, which is crazy. I would never, ever have my Bitcoin in Robinhood. I actually need to watch that Supreme Junk Removal. That reminds me, I'm actually going to end this live stream pretty soon here. So that's actually, I think everybody should probably watch that. That's probably going to be a great one. He says, hey, Rob, have you seen the PBD podcast today with Michael Saylor talking about Bitcoin? That was a golden podcast to watch. I'm excited for that because I really like both of those individuals. Big fan of Patrick Bet-David. Really good guy. So I'm excited about that. Well, all right, everybody. I appreciate you guys all for tuning in. If you're not subscribed to the channel, please do subscribe. If you're not following me on the Instagram, I know I keep saying it, but it's really important to follow on a different platform just so I have another place because the notifications haven't been working for some reason. Don't ask me why. But if you don't want to have to rely on the notification getting to you on YouTube, you will get notified when I go live and when I post videos on Instagram. Just make sure to check for my story on Instagram at Rob Sultan on Instagram. If you want to see pictures of the stuff that I buy, if you want to be able to reach out to me and shoot me a DM there, follow me on Instagram at Rob Sultan on Instagram. We're starting to get some good traction on the Instagram, actually, even more traction than I get on the YouTube sometimes. So that's a good thing. You know, I have a different platform. So if things don't work out, then I have another one. So make sure to follow me on the Instagram at Rob Sultan there. Make sure, if you're not subscribed to the channel, would appreciate it if you click that subscribe and the bell. Hopefully that notification does work. If you click the subscribe and the bell there, really appreciate y'all doing that. And anybody who hit the like button to help my videos get out there to the algorithm, regardless of how crazy of the stuff I talk about and the algorithm not really liking that stuff that I talk about, if we all hit the like button, it gets it out there, whether they like it or not. So I appreciate everybody doing that. Have a great rest of your night, everybody. I will see you at the next video. Signing out.